Well, homeowners owing more than their home is worth are turning to a new solution: buy and bail. Those with strong credit get a new mortgage for a similar, cheaper home, then let their first house go into foreclosure. We break down this practice with Chris Thornburg, an economist and principal at Beacon Economics, and Steve Hawks is a realtor with Remax Platinum in Las Vegas, who's fielded hundreds of calls about the process. Steve, start from the beginning and kind of explain to me a little bit how this exactly works, because I would think that if you foreclose on one home, your credit record is not going to be strong enough to get another one.
Well, what consumers, homeowners are starting to realize is that the value of their home is not going to recover quick enough for them to be able to refinance out of their adjustable in the term that the loan's going to adjust. So what they're doing is looking for alternatives. And one of the alternatives that they're looking at is buying a smaller home, a more affordable home on a fixed rate. The way they're doing this, or planning on doing it, if you're behind on your payments already, it's going to be difficult, if possible at all. But if you are current on your current home, some homeowners are looking for the alternative to get another loan on a smaller, more affordable property. The lender that they go to, depending on their qualifications, will determine if they're able to do it or not.
You know, Christopher, is this a worthwhile thing for someone to actually try and do, or does this just mean, we're going to face more problems with the housing market down the road?
Well, of course it's a worthwhile thing. We're really in an unusual circumstance. We're watching prices fall in many parts of the U.S. at a rate they've never fallen at before. And let's say you're living in the Inland Empire. You may be looking at a house down the street, exactly the same as your house, except for it's selling for $200,000 cheaper than what you bought your house for. So with this kind of gap there, a lot of people have the incentive to get out of their house and get the cheaper one. Now, the key here, as was pointed out, is how do you get that second mortgage? Well, one thing, of course, you can do is if you just have enough income, the mortgage company will probably allow you to carry both of those. But then if you have enough income, you maybe find yourself in trouble if you bail out. What a lot of people are doing, though, and this is where the allegations of fraud come into play, is they're claiming that for their first house, they're actually going to rent that out. And as a result of turning that into a rental property, the mortgage company gives them a little leeway in terms of their credit rating.
Okay, but Christopher, they have no intention of renting it out.
Exactly.
Right.
They buy that second house and then they bail. No one ever rents it, and of course the bank ends up with a foreclosed house. And that's the rub. That's where the fraud is being implied here, because they're claiming, of course, they're going to rent that first house out.
So suppose you're a homeowner that's in trouble and you do actually want to do this, Christopher. What are the limitations that you're going to face in terms of trying to get something like this done?
Again, well, the two limitations, really. The first thing is you really got to be able to qualify for that second mortgage with the first mortgage still on your books. If you bail on that home or you're seriously behind in that home, you're never going to have the credit rating to get that second mortgage. Of course, the second part of this is we're in a kind of a new world right now, and there's lots of new tricks being played out there. And as each new trick pops up, of course, the banks are going to respond to that. And so the banks are already talking about how they may change their methodology in order to prevent this kind of practice moving into the future.
Steve, are there any legal ramifications? I mean, can the bank come after you? Have they been going after people that have done this buy and bail strategy? Well,
this is still a new phenomena. With the prices, like Chris was saying, it dropped so much. The homeowners are weighing their option. How much is their good credit worth? A lot of homes in Vegas that are $500,000–600,000 are now $200,000 to $400,000. So people are weighing their options. Is it worth the risk of the bank coming after us on our new home? Well, they're already down $200,000 or $300,000 on their current home. So even if the banks do come after them, they're still ahead of the game or even. And the chances and the likelihood of the banks going after the people on their new home is yet to be seen, especially is it cost effective for the bank to do this.
Christopher, any idea how many people have actually done this?
No, it's hard to say at this point in time. We just don't have that good a track of the system, but we know anecdotally that it is in fact occurring. And in many ways, someone may bail on a home to buy another home. They may bail on their home simply to move into an apartment. Walkaways is really the current trend. A lot of people underwater, and it's hard to justify staying in that house.
Okay, thank you so much. We appreciate it, Christopher and Steve.